Hello viewers, welcome to my channel. I'm Hasham. So now I'm doing the problems on holding companies. Already in the previous video I have completed six short problems on holding companies. But before that I have uploaded the theory video of what is holding company, what is subsidiary company, introduction part of this topic holding companies, how to make a consolidated balance sheet, Consolidated Financial Statements, and what are the provisions of AS 21, Accounting Standard 21 given by the ICAI regarding Consolidated Balance Sheet, how to calculate capital profit, revenue profit, and how to find out the goodwill or capital reserve, minority interest, intercompany transactions. All these things I have explained. So before watching the problems, before learning the problems, first of all you must have a good command, good grasp on the theory part of holding companies. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel, select the subject Advanced Corporate Accounting. In that the topic is holding companies. Select the subject, select the topic, watch the video till the end. Definitely you will get a good grasp on the theoretical aspect, theoretical concepts of this holding company. Then you start watching the problems. So apart from this I have uploaded so many other subjects videos. So visit the playlist, select the subject, select the topic and watch the video to enhance your knowledge. So before starting the next problem, that is problem number 7, I expect my viewers to have a printout of the problems which I have given in the link under my description. So keep ready the problems and then start watching the video. Now 7th problem I am reading out. See carefully. The following are the balance sheets of H Limited and S Limited as on 31st March 2009. So by wording of the company itself we can decide H Limited is the holding company, S Limited is the subsidiary company. Now balance sheet is given in the problem. Liability side, share capital, shares of rupees 10 each fully paid. 2,50,000 share capital for holding company and 1 lakh rupees is the share capital of subsidiary company. Remember one point, first point, when we make consolidated balance sheet we take the share capital of only holding company. Subsidiary company share capital will not come in the consolidated balance sheet. Every problem, from first problem I am telling the same thing. Now reserves are given holding company 50,000 and subsidiary company 25,000. Second point, the reserves of holding company will definitely come in the consolidated balance sheet, whereas the reserves of subsidiary company will be considered while calculating goodwill or capital reserve, right? Now creditors. The creditors are trade payable. We simply add up the trade payable of both the companies and we take it in the consolidated balance sheet. Asset side. Sundry assets. Sundry assets are given separately for H Limited, S Limited. Combine it, merge it and take the total sundry assets in consolidated balance sheet. Now 60% shares in S Limited acquired on 31st March 2008. Remember, holding company holds 60% of shares in subsidiary company. The remaining 40% shares are held by outsiders, that is minority interest. First point. Second point, the shares are purchased on 31st March 2008. We are given the balance sheet on 31st March 2009. That means 1 year was over. At the beginning of the year itself, the H Limited has purchased the shares in S Limited. Now preliminary expenses. Actually preliminary expenses are fictitious asset, imaginary asset, right? The preliminary expenses are given in S Limited. So it's a capital loss. This 3,000 rupees is the capital loss. So capital profit and capital loss will be considered for calculating goodwill. This preliminary expenses will not. So 60% shares in S Limited acquired on 31st March 2008. So holding company holds 60% shares of S Limited. Remaining 40% are held by the outsiders. So we have to calculate minority interest. and shares were acquired on 31st March 2008. Our balance sheet is given on 31st March 2009. So 1 year was over. And preliminary expenses. This preliminary expense is given in S Limited. That is a fictitious asset, capital loss. So here, this fictitious asset will be taken into consideration for calculating goodwill or capital reserve. Prepare a consolidated balance sheet as at 31st March 2009. So this problem we have to prepare a consolidated balance sheet. Before making a consolidated balance sheet, we have to make some working notes. In working notes, we have to calculate the goodwill, we have to calculate the minority interest. So remember the steps. First step, calculate the capital profit or capital loss. What do you mean by capital profit? The profit earned by the subsidiary before acquisition of shares. Before acquisition of shares, जो भी profit या loss रहेगा वो capital profit या capital loss. After acquisition, the profit that will be treated as revenue profit. So after calculating the capital profit, capital loss, the next step we calculate goodwill or capital reserve. The third step we calculate minority interest. After this, we have to make the consolidated balance sheet. Now see here, shares of H Limited 60% and shares of outsider 40%. First of all, we have to decide. It is given in the problem. 60% shares held by H Limited. Now capital loss. The loss before acquisition of shares. Before taking up the shares, how much is the loss in subsidiary company? Here we have preliminary expenses is a capital loss. How much preliminary expenses? 3,000 rupees given in the balance sheet. Now this 3,000 rupees capital loss will be divided between H Limited and minority interest. So H Limited is holding 60% shares of S Limited. So share of H Limited is 60% of 3,000. It comes to 1,800. Similarly, share of minority interest outsider minority interest is 40% of 3,000, 1,200. So first of all, you have divided the capital loss into H Limited share and minority interest. Secondly, capital profit. I told you the reserves and profits. The reserves and profits appearing in subsidiary books before the date of acquisition. That is called capital profit. Here in our problem, reserves are given. So we'll assume that these reserves are not created in the current year. The reserves are coming from the last year only. The reserves are coming from the last year. It is the reserve created before acquisition. So it's a capital profit. How much is the reserve? 25,000 rupees reserves are given. This is a capital profit. Now divide this 25,000 between H Limited share and minority interest. H Limited holds 60%. So 60% of 25,000, 15,000 is the share of capital profit of H Limited. And 40% is a share of minority interest. 40% of 25,000, 10,000. That's all. Now we'll come to calculate the goodwill or capital reserve. For calculating goodwill or capital reserve, take the cost of investment. The investments are given in the balance sheet asset side, H Limited. H Limited, how much money he has invested in S Limited. That is the cost of investment that is given in the balance sheet. The cost of investment of H Limited, 81,200 given in the balance sheet. From this, we deduct the paid up share capital and capital profit. Paid up share capital and capital profit. So how many shares, how much shares this H Limited is holding? 60%. So how much is the total capital of this S Limited? 1 lakh. S Limited capital is 1 lakh. 60% is being held by H Limited. So 60% of 1 lakh, 60,000. Now share of capital profit. Already we have calculated. Capital profit. Share of H Limited is 15,000. So take 15,000. Add up both 75,000. From this deduct share of capital loss. Capital loss is 1,800. So deduct 1,800, 73,200. Now 81,200 minus 73,200, it is goodwill. If you get positive value, goodwill. If you get negative value, capital reserve. So this goodwill 8,000 will appear in consolidated balance sheet under intangible asset. Intangible asset. So this is the first problem. Remember carefully. First we have to calculate the capital profit or revenue profit. Then we have to calculate goodwill or capital reserve. Now minority interest. 40% stake is of outsider. So 40% of what? 40% of share capital, 40% of capital profit, 40% of capital loss. The paid up share capital. First we'll take paid up share capital. So 40% of 1 lakh, total share capital 1 lakh, 40% comes to 40,000. Similarly, share of capital profit, here we have calculated, share of capital profit is 10,000. Take 10,000, 40 plus 10, 50,000. From this, deduct share of capital loss. How much capital loss? 1200. So deduct 1200, we'll get 48,800 is the minority interest. And this minority interest will be taken on the liability side. It will be taken under liability side. That's all. So these are the basic calculations we require for making consolidated balance sheet. Now, consolidated balance sheet of holding company H Limited and its subsidiary S Limited as on 31st March 2009. Now see carefully. Equity and liability, shareholders fund, share capital. Already you are aware about the format of the balance sheet. Vertical format of the balance sheet according to Companies Act 2013. So equity and liability, shareholders fund, share capital. Under share capital, 25,000 shares of rupees 10 each, 2,50,000. I told you, while making consolidated balance sheet, we should take only the share capital of holding company, not subsidiary company. Subsidiary company capital is already considered while calculating goodwill or capital reserve and also in calculating minority interest. So share capital of subsidiary company should never be taken. Share capital of holding company will be taken. Reserves. The reserves of holding company will be taken as it is. As it is. The holding company reserves are given 50,000 in the problem. Same thing I have taken, I have not changed. Reserves of subsidiary company should not be taken because reserves of subsidiary company already divided between holding company share and also minority interest. The reserves of subsidiary company should not be taken. Minority interest, just now we have calculated 48,800. Current liability, trade payable, creditors. Creditors. Now we add up the creditors of holding company and subsidiary company. Both the companies' creditors add up. No adjustment, nothing. Take the total, we got the liability side total 4,18,800. Now asset side, fixed assets. Under fixed asset, tangible assets. See the problem? Asset side of the balance sheet, we are given tangible asset, that is sundry assets. Add up both the sundry assets, we'll get the total. Intangible asset, goodwill. Just now we have calculated goodwill 8,000. This will appear 8,000. Current assets are not given in the problem. Balance sheet tally 4,18,800. This is the complete problem on consolidated balance sheet. So this is the end of problem number 7. Now see the 8th problem. On 31st March 2003, the balance sheet of HC Limited and its subsidiary SC Limited stood as follows. So both the company's balance sheets are given. Equity share capital 12 lakh, 3 lakh. Holding company 12 lakh, subsidiary company 3 lakh. Reserves 225, 105, 1 lakh 5,000. Profit and loss account, P&L account, profit and loss account 1 lakh 35,000, 82,500. Creditors 1 lakh 80, 1 lakh 20. This is the liability side. Asset side, fixed assets are given. Then share in SC Limited at cost 4 lakh 20,000. That means this HC Limited has invested in SC Limited, purchased the shares of SC Limited at a cost of rupees 4 lakh 20,000. This is the investment made by holding company in subsidiary company. And current assets are given for both the companies. H Limited acquired 75% of shares of SC Limited. Remaining 25% shares are held by outsider, minority interest. On 31st July 2002, SC Limited earned a profit of 67,500 for the year ended 31st March 2003. Actually, HC Limited acquired 75% of shares of SC Limited on 31st July 2002. Shares are acquired on 31st July 2002. So how many months are there? July means August, September, October, November, December, January, February, March. So 8 months. In the current year, 8 months are post-acquisition. 4 months are pre-acquisition. Find out minority interest. That means in the whole problem, it is asking only one thing. It is asking you to calculate minority interest. See here. The date when the shares are acquired, we don't require. If we have to prepare the consolidated balance sheet, if we want to calculate the goodwill or capital reserve, then all these information we require. But our objective here is simply to calculate minority interest, only minority interest. 75% shares are held by holding company, 25% shares are held by outsider. Finished. That is the only requirement we need. 25% stake is of outsider. So what? 25% of what? 25% of share capital, 25% of reserves, 25% of profits. Now we don't require profit before acquisition, after acquisition, right? This we require profit before acquisition, after acquisition only for calculating goodwill. When we are required to calculate goodwill, we need that. In this problem, we are not required to calculate the goodwill. We need to calculate only minority interest. So we take 25% of share capital, 25% of reserves, and 25% of P&L account, profit and loss account. See here, calculation of minority interest. Share of H Limited is 75%. And share of minority interest is 25%. 75%, 25%. But we have to calculate minority interest. Paid up share capital. The total paid up share capital of SC Limited is 3 lakh. It is given in the problem. 3 lakh rupees is the paid up share capital of SC Limited. In that 3 lakh, 25% is of minority interest. So 25% of 3 lakh. Sorry. Reserves. SC Limited reserves are 1,05,000. 1,05,000. 25% of 1,05,000. That is 26,250. Reserves. P&L account. P&L account is given 82,500. The accumulated profit surplus is 82,500. Again, 25% of 82,500. 20,620. That's all. Take the total of these three items. 1,21,875. This is the minority interest. That's all. This is the problem number 8. Now, 9th problem. The balance sheets of H Limited and S Limited are given below. So, two balance sheets are given, holding company and subsidiary company. Share capital, shares of rupees 10 each. Holding company share capital 10 lakh, subsidiary share capital 5 lakh. Then general reserve on 1st April 2003, beginning of the year. Actually, the balance sheet is given at the end of the year, 31st March 2004. But here, general reserve balance on 1/4/2003, beginning of the year, general reserve for both the companies. Profit and loss account on 1/4/2003, beginning of the year, surplus. Profit and loss account for both the companies. Profit for the year ended 31st March 2004. Our year is ending on 31st March 2004. So during the current year, profit earned is 3 lakh rupees H Limited, 2 lakh rupees S Limited. Creditors for both the companies given. Sundry assets, both the companies given. Investment in shares of S Limited, 30,000 shares at a cost of rupees 7 lakh. Now see here. Investments made by holding company in subsidiary company. 30,000 shares they have purchased. So totally how many shares are there in S Limited? Liability side you see. Share capital, shares of rupees 10 each, 5 lakh. In SC Limited, S Limited 5 lakh rupees. So 5 lakh divided by 10, 50,000. The total number of shares in subsidiary company is 50,000. Out of 50,000, 30,000 shares are held by holding company. Remaining 20,000 shares are held by outsider. The proportion will be 30,000 by 50,000, 3 by 5. So 3 by 5 is the proportion of holding company in subsidiary company. And 20,000 by 50,000, 2 by 5. 2 by 5 is the proportion of outsider minority interest. and they have purchased the 30,000 shares for rupees 7 lakh. This is the investment cost. What it is asking, next page, H Limited acquired the shares in S Limited on 1st October 2003. Calculate the goodwill and minority interest. Okay. In this problem, we are not required to make the consolidated balance sheet. We are required to calculate the goodwill and minority interest. These two items we have to calculate. Now, the shares are acquired by H Limited in S Limited on 1st October 2003. We are closing the accounts on 31st March 2004. So how many months? October, November, December, January, February, March. 6 months. So in the whole 12 months period, 6 months are post-acquisition, 6 months are pre-acquisition. So for this year, from 1/4/2003 to 31st March 2004, for this 12 months period, 6 months are pre and 6 months are post. So how much is the profit earned during the year? It is given S Limited has earned a profit of 2 lakh. During the current year, S Limited has earned a profit of 2 lakh. Half of 2 lakh, 1 lakh. So 1 lakh rupees profit pre-acquisition and 1 lakh rupees profit post-acquisition. So pre-acquisition profit is a capital profit. Pre-acquisition profit is a capital profit. And we calculate the goodwill by taking into account capital profit. That's the problem. Now, one by one, step by step, we'll see the solution. Total number of shares in S Limited 50,000. 50,000 total number of shares. Now, number of shares held by H Limited 30,000. Number of shares held by outsider 20,000. The ratio, share of H Limited will be 30,000 by 50,000. So 3 by 5. Share of outsider 20,000 by 50,000, 2 by 5. Share of holding company and share of outsider. Now, current year's profit of S Limited is 2 lakh. Current year's profit of S Limited, 2 lakh. Now, pre-acquisition profit, the profit before acquisition. Actually, shares are acquired on 1st October 2003. Our year begins from 1st April 2003. The current year begins from 1st April 2003. So, April, May, June, July, August, September. 6 months. April, May, June, July, August, September. These 6 months are pre. Then October, November, December, January, February, March. These 6 months are post. But we require the profit before acquisition. That is pre-acquisition. So half of 2 lakh, 1 lakh. Half of 2 lakh is 1 lakh. Now share of H Limited. Now in this capital profit of 1 lakh, how much is the share of H Limited? Share of H Limited is 3 by 5. So 1 lakh into 3 by 5, 60,000. So in this 1 lakh rupees capital profit, 60,000 rupees is the capital profit of H Limited and 40,000 is the capital profit of minority interest, outsiders. Finished. Now calculation of goodwill or capital reserve. Now cost of investment of H Limited 7 lakh. In the balance sheet it is given on the asset side. Investments made by H Limited in S Limited is 7 lakh. From this we deduct the paid up share capital as well as capital profit. दोनों को ऐड कर देंगे, पेड अप कैपिटल प्लस कैपिटल प्रॉफिट, दोनों को ऐड करके कॉस्ट ऑफ इन्वेस्टमेंट में से माइनस कर. इफ यू गेट पॉजिटिव वैल्यू गुडविल, नेगेटिव वैल्यू कैपिटल रिजर्व. नाउ पेड अप शेयर कैपिटल, हाउ मेनी शेयर्स होल्डिंग कंपनी इज होल्डिंग? 30,000 shares they are holding. Each share face value is 10 rupees. So 30,000 into 10, 3 lakh paid up share capital. Share in general reserve. I told you capital profit means the profit and reserves before acquisition. Before acquisition. And 1/10/2003 is the date of acquisition. So any profit or reserves before this 1/10/2003 is a capital profit. Right? So here share in general reserve. So 2 lakh rupees is the general reserve given in the problem of S Limited. And this general reserve is on 1/4/2003. 1st April 2003, beginning of the year. तो जो भी beginning of the year रहेगा तब completely capital profit है. The general reserve 2 lakh into 3 by 5, 1,20,000. Share in capital profit. Profit and loss account is also given. The profit and loss account balance on 1/4/2003. This is also before the date of acquisition. Before the date of acquisition. So this surplus P&L account, that's a capital profit. So 3 lakh into 3 by 5, 1,80,000. Current years. The current year's capital profit is 1 lakh. The current year 6-month profit is capital profit 1 lakh. Uska share of H Limited is 60,000. Share of H Limited is 60,000. Take 60,000. Now add up 3 lakh plus 120 plus 180 plus 60, you'll get 6 lakh 60,000. Subtract 7 lakh minus 6 lakh 60,000. 40,000 rupees is the goodwill. That's it. So it may be difficult when you first watch this video or first time when you do this problem, it will be difficult. But if you watch this video some 2-3 times, definitely you can be able to understand logic. Comparatively, this holding company chapter is a little bit difficult chapter from the student's point of view because there are number of calculations to be made. So first glance itself, you may not be able to completely understand. So have some patience, watch it twice, thrice, definitely you can be able to get a good grasp on the topic. So goodwill over. Now calculation of minority interest. Minority interest. So paid up share capital. Paid up share capital, 20,000 shares of 10 each. Out of 50,000, 30,000 shares are held by H Limited and 20,000 shares are held by outsider. Minority interest. 20,000 into 10, 2 lakh. Share in reserves. The reserves are given in the balance sheet. S Limited reserves. 2 lakh rupees is the reserves of S Limited. So out of 2 lakh, 2/5. Share of minority interest is 2 by 5. So 2 lakh into 2 by 5, 80,000. Then sharing profit and loss account. The profit and loss account of S Limited is 3 lakh into 2 by 5, 1,20,000. Sharing current year's profit. Current year's total profit. Current year's profit is 2 lakh rupees. They are not concerned. Minority interest is not concerned about capital profit or revenue profit. They want the profit, that's it. For calculating goodwill, we have to segregate capital profit, revenue profit. But for minority interest point of view, they want complete profit. So current year's total profit is 2 lakh. In that 2 lakh rupees, 2/5 is the share belongs to minority interest. 80,000. Now take the total of all these 4 items. 4,80,000 is the minority interest. That's it. So this is the end of problem number 9. So totally 9 problems we have completed on holding companies. These are the basic problems. After completing one more problem, 10th will be the last problem, short problem. Then from next problem onwards, next video will start the long problem, main problem on holding companies. So if you are satisfied with my lecture, if you think that this lecture will increase your knowledge, will get a good command on the subject, give a like to the video. Share my channel in your friend circle, in your groups, so that more students can watch these videos. Give your comments on these lectures. And lastly, don't forget to subscribe my channel. We'll continue the next problem in the next video.